back. Well, as part of our ongoing series, Asian Tigers, Udin Mukherjee caught up with Andrew Swan, MD and Head of Asian Equities at BlackRock, and began by asking him on what he makes of the emerging market story right now and how is India positioned currently.
People are generally still concerned about the longer-term outlook, even though short-term there has been an improvement. I think most investors are still concerned that the problems that have been there the last 5 years can re-emerge quite quickly. So I'm of the view that this recovery that we're seeing is actually longer in tail than people actually think. So the outlook's actually quite positive, but investors still generally are quite cautious.
What do you put that down to? The experience of the last 3-4 years where people have taken their plunge and then they've been disappointed? Do you think it's the rear view mirror which is making them cautious?
There are some big issues, structural issues, that a lot of investors have difficulty, changing their views on, whether it's in emerging markets in general, in governance, or it's in terms of debt issues within places like China. So yeah, people are generally cautious. And then if you look at what's happening in large economies like the US, a lot of the rhetoric at this stage has also been fairly negative if it's followed through for places like emerging markets. So investors are both focused still on the problems of the past and concerned about some of the policies of the future, so it's holding them back.
The trio of low margins, double-digit growth ahead and compressed valuations. On which of these three parameters does India score and on which does it not?
Well, India has a domestic growth cycle which is sometimes synchronized and sometimes not. At the moment it's probably less synchronized because of domestic policy, particularly things like demonetisation, which have at least put a brake to growth short term. At the same time that more cyclical economies, so you'd classify India probably more as a structural growth economy. The more cyclical economy, the more mature economies are seeing a recovery. So relatively speaking, the earnings growth potential outside of India is actually increasing in some of those, particularly like North Asia. That's for now. I would say over the next 3 to 4 to 5 years, I'd say that India will start to re-establish itself as a high growth and accelerating growth market, and that will bring investors back, particularly foreign investors. And again, a lot of the policies which have been put in place in India are negative for short-term growth, but certainly positive for longer-term growth. And so the other aspect to this is that in terms of when you think about long-term growth, what really drives it is low leverage and good demographics, and India has those. There is pockets of high leverage, but generally as an economy there is low leverage and good demographics. So you have the potential tailwinds for growth, which many markets globally don't have. So that's why I would say that short-term, I would say other markets actually look probably relatively better because of the near-term growth, but longer-term I think India is very, very attractive.
Right, you can catch the whole conversation all day today only on CNBC TV 18. Make sure you stay tuned to that.